Hi, this evening I'd like to talk about investing in real estate investment trusts. Now, real estate investment trusts, also called REITs or REITs, invest in real estate. Now, sometimes the investments are actual physical real estate, and with some REITs, they are the companies that lend the money to commercial developers, and the REIT investments are in the form of mortgages, similar to a bank. It's more of a financial investment. Now, myself, I've had more success over the years investing in the REITs that have the actual physical real estate. What the REIT will do is pay out 90% of the rental income to the shareholders. So you buy the REITs like you would a stock, and you reap the benefits of rental income. Currently, the size of the dividends or the rent are quite substantial. You have the sector right now that's a little out of favor are the hospitality, the lodging type of companies, Chesapeake Lodging, Host Hotels, LaSalle Hotels. They are all closer to their 52-week low price, and therefore are yielding a fairly healthy dividend right now. Now, different sectors will come in and out of favor within the actual real estate industry. There are office REITs, there are retail REITs. As I said, there's lodging, there's mortgage REITs, there's college campus housing REITs, there are residential housing REITs. So there's all kinds of different sectors within that sector. Now, overall, REITs, for the most part, have gotten pretty expensive, and that's been driven by the lower interest rates over the past several years, and especially this past year. We have the 10-year bond rate down under 1.7, and it's been under that rate, that 1.7%, for several months now. So the real estate trusts have gotten quite expensive. So you always want to be aware of the effects that the interest rates can have on these particular stocks. For example, there's another retail stock real estate investment trust called Realty Income, and they own retail properties, and that particular stock over the past 12 months or so has gone from the low 40s all the way up to the low 70s. So an incredible return if you were lucky enough to buy it near the lows and ride it up until the highs of 60% or 70%. Since it hit its high at 73, it's back down to 63. And but it's still a very healthy return. So my point of going into all that is that you want to be very price aware when you are purchasing these stocks. You are best to buy them closer to the 52-week lows. Just be patient, wait till they get down there, and then it's always a good idea to trim some of your gains when you get near the highs. Now, that again, getting back to Realty Income, if you had sold it at its previous 52-week high, you would have sold it around $55 a share, and it went all the way up to 73. So there's no guarantees, with stock investing. It's always, a little uncertain. But if you have certain disciplines over the long run, you'll have success. So I guess that's about it for now. I don't want to go on too long. This is a topic that I'm going to follow up on. Real estate can be a very good investment. Like I said, you have to be very aware of interest rates and the interest rate cycle, because as interest rates go up, the price of these real estate trust stocks will usually go down. I think it was back in 2013 or 2014 where there was the Bernanke came out with his tapering statement, that he was going to discontinue the quantitative easing and gradually start to increase interest rates. And the real estate stocks took quite a hit back then. And then last year, in anticipation of rates supposedly going up this year, the REITs took big losses last year. But when the interest rate hikes never happened this year, the real estate stocks have been fantastic. So it's good to be aware of where rates are, and like I said, to try and buy these stocks when they're close to their 52-week lows, and to trim your position when they're close to their 52-week highs. So that's about it. I hope this was helpful, and I'll see you next time.